Welcome to Crypto Talk with Brianna and Scott, where we are living the decentralized life. Join us for the latest crypto news, talk, and analysis. And now, here are J. Scott McMillan and Brianna Turk.
Thank you, generous audience, for that huge applause. We are so glad you're joining us today. Thank you for the huge applause, and thank you, Mr. AI Robot, for introducing us. I'm J. Scott McMillan. This is Brianna Turk. Brianna, how you doing today?
I'm amped after that introduction. That just amps me up. I forgot. I don't know. I think Scott might have a little screen of me, like what I do on my end. I don't know, but like, if you could see me during that time, I'm like, yeah, I'm like really feeling that intro. So I'm good. I'm doing really well. I have been reading so much actually over this last week on just various things when it comes to a lot of stuff with AI and just different partnerships and collaborations. So I'm kind of taking it easy breezy today. If you've watched our shows in the past, you know that I talk a lot about El Salvador. I keep up with El Salvador. And so I'm going to bring forth what's happening there. I'm just really excited about what they're doing there. I'm going to also bring forth an AI drone that went rogue. So we will talk about that.
Wow.
There's a lot of controversy as to whether or not this happened, but we will talk about it. And then if we get to it, a little bit about Bitcoin Pizza. The first transaction ever made with Bitcoin was for two pizzas. And last month, the month of May, was I can't speak today, Bitcoin Pizza Month. And so we're going to talk about how much that has appreciated over time. That amount, the $40 that he spent in Bitcoin, and what it is today. So that's what I have.
That's
how are you, Scott?
Expensive pizza. I'm good. Before we get on here, Mohammed, hello. He says hello. How you doing, buddy? Good to have you here. All right. I've got a couple different articles here. I've got one on, have you ever heard of the term composability in crypto?
I don't believe so.
I've heard this term bantered about, and I've never really understood it. I have a little bit of article on that. I'm not sure that I've fully gained that much info on this article, but it's something that came up. It was kind of a weak news week for me. I found there are two companies that were just granted by FINRA, which is the Financial Industry Regulatory Authority, to become broker-dealers for digital securities. What does all that garbly-gook mean? We'll talk about that. And again, if we have time, I know you brought up WorldCoin before, that was founded, one of the founders, Sam Altman of OpenAI. I just got a little bit more information. I think it's a little bit more. I just have a little bit of article on that, so I find that's interesting.
Cool.
But what I think I'll do to open things up is, I don't know, I'm feeling like I want to share my path as I am moving into trading crypto tokens. It's something I used to talk about a lot. Like, I used to I didn't put down trading. I just said I didn't have time or the mental ability to deal with trading coins, because I really felt like when I came into crypto, that's what everybody was talking about. Oh, it's like you invest in Bitcoin and then, oh, look at all these other coins you can invest in, right? And I quickly got overwhelmed. Like, I couldn't understand how to evaluate other coins, really. And okay, do you get this question? Does anybody get this question? I'll ask you, Brianna. Do you ever get this question? Well, like Bitcoin or crypto, like, how do you value it? Like, what's it based on? Do you get that question? Yeah.
Oh, yeah.
I mean, that's the number one question. And it's difficult. Like, we have all things we can say. We can say a lot of things, and they're probably all true, but it is hard to sort of pin down. And, that was sort of a tangent, but it was like, that really bothered me too. It's like, if Bitcoin is hard to figure out how to evaluate, then how in the heck are you supposed to evaluate these other coins? And on the easy side, it was like, okay, you look at it and these are other blockchains for the most part. You've got other layer ones and layer twos, and they're competing with Bitcoin and Ethereum, more Ethereum really. And are they going to be better? Are they going to bring something to the table that's going to make that technology or crypto project like really beneficial, right? Or really in the future, is it going to be the one that we're all using? And that, like, okay, well, so you try to figure that out, and then you kind of put a bet on that, right? Maybe it's Cardano, maybe it's XRP, maybe it's the layer twos came on, maybe it's Polygon. But I still found that really hard. So then I went into DeFi, which there's other ways that you have to evaluate that, but it's sort of different. It's more about what kind of APR, APY you're going to get. Is the DApp stable? Has it been hacked? There's things like that. But then there's trading, and I think I've talked about this before. You got the difference between an investor and a trader, and I say an investor is somebody that's going to invest in a coin or a token that they don't have plans to sell it. It's not that they won't, but they don't have any immediate plans to sell it. They may hold it for 6 months, 3 months, 6 months, a year, 10 years, right? So for me, Bitcoin is something that I just buy and hold. Doesn't mean I won't sell some at some point when it makes sense, but for the most part, I don't worry about it. Pretty much with ETH too. Traders, in my opinion, are when you're looking to invest in a coin and you have an idea of when you want to enter, and you're trying to evaluate when's the best time to enter that trade and when's the best time to get out. And you're looking at typically anywhere from 3 weeks to a month, maybe 3 months, maybe. And that's typically called swing trading. And then, of course, day trading is when you're looking at the hourly charts, or you're looking at something and you're looking to get in and out within a day, right? So I sort of thought to myself, well, I think I'm probably a swing trader, which would mean I would look to get into a position on a coin and in a week, 2-3 weeks, maybe a month, get out of it and kind of take that profit. And, based upon some of the rules that I've learned, one of the biggest things that I've learned is that to be successful, you have to have a plan, and you have to stick to this plan rigidly. And one of the biggest things is, and we learned this, Brianna and I, where we met in our Kings of DeFi class, was that you never want to put in more than 2% of your total capital that you're going to invest in, right? And if you keep to that rule, and that you're only going to invest 2% of your total capital in one trade, then if you lose it, it doesn't wipe you out, right? And what that really does, what I found out, is the game of trading apparently is staying in the game. It's not really about trying to win all the time, because you aren't. It's a probability game. And so really you're trying to just stay in the game. And you know that you're going to win some and lose some. And what you have is what's called the edge. The edge is, how are you determining when to get into the market and maybe when to get out? And what are you using to make that determination? That's your edge. And so for me, what seemed to make sense, because I had a hard time trying to figure out, well, how do I evaluate coins? And how do I say, well, this coin is better than this coin and this one's going to go up? I just started to learn how to read charts. And because to me, it seemed like, okay, I'm looking at these charts. It's just the history of price movement over the history of that coin or token. And what we know, if we study financial history and markets, is that they tend to repeat themselves. They don't always, but they tend to. And literally, the price movement in markets, any market, stock market, crypto market, whatever, right? Commodities, they form these patterns. And you can look at these charts and you can see these weird things like head and shoulders, cup and handle, double tops, all these funny little things that people who read charts have looked at and said, hey, this looks like a head and shoulders. Well, and when this pattern emerges, it's probably going to do this, go up or go down, right? And so you look at all that kind of stuff. Then I thought, well, And then there's all these theories like you can just look at trend lines. A lot of successful traders basically just look and they say, what's the high and low in the past? Where's the high and low been? And you kind of look now and see, well, is it closer to the high or the low? And you kind of just determine if you think it's going to go up or down based on maybe how the market's doing and so on. And you know from these high and low that tend to be resistance lines or support lines. So the market will literally, and you can see this, literally the market will go up and down, and you'll kind of draw a line in the past lows, and you'll see that it's a good chance that wherever the price is now, if it's going to go down, it'll hit that low that it's hit before and bounce back up. It's funny, almost strange, like magic. Like you can draw these lines, right? And I know you've done this Brianna, and you're like, it's like magic. The price literally bounces off these arbitrary lines that you just drew on your screen. And then all of a sudden there's these magic lines that the price bounces off of. And the same thing for resistance, right? It goes up and it hits this imaginary line. It's completely imaginary because you just drew it and it bounces down. But that tells you that it's market psychology. These are a bunch of people. Markets are nothing more than people that are placing bets or placing, trades. And they're thinking the same way you're trying to think, probably. And if you learn a technique like charting, it's pretty much the same. So anybody that's reading charts are all thinking pretty much the same thing. So that psychology actually moves the market, which is interesting. And so there's a whole theory and technique behind that. So I am just starting out. So I decided just to try this on a fight. So I've been studying charting, studying some of the things, and I haven't actually put any trades in, but I've got 3 trades here. I'm going to show you guys. All right, so this is my daily, so I basically can look at this and I'll say, I'm going to check TradingView for what my current trades are or what trades are coming up. And I'm planning to look at the top 100 coins. This was something I didn't know. I was like, well, how do I pick, like, of all of them, which ones do I pick to even look at and try to make charts out of? I just thought, I'm just going to start with the top 100, and I'm just going to go down the list and take a couple every day, look at the chart and say, do I see any patterns evolving? And to my surprise, it was easier than I thought. It was like a lot of them had something. Doesn't mean they'll pan out, and it means I need to look in further, but I was surprised. Like, usually there's something on a chart that indicates there might be a movement one way or the other. Not always, though. And then I've got some other investment things that I work on. But I've got 3 here. I've got Polygon, XRP, and Ethereum that I'm kind of looking at right now. And so what I do is I take notes on this stuff. And I've kind of got, first thing I do is I draw support and resistance lines, and I just look, like you can see in this little chart, the red lines there are just kind of looking like what are the trends of this price movement. Then I look at the yellow, if you can see this, let's make this bigger. The yellow line is the 200-day moving average. The blue line is the 50-day moving average, and the red one is the 20-day moving average. So these just kind of tell you what are the moving average prices, along. And sometimes people also trade on just this information, and they say if the price moves up above or below, or sometimes if they cross. So like when the lower value moving average crosses the higher one, that's typically means a bullish move, probably. So I just start to look at that, and then so I look at those, and then there's some indicators. The RSI indicator, which is the relative strength of the price movement, which I'm still learning. There's the MACD, which is another indicator that you can put on, and you put these on in TradingView. I'll show you that in a minute. And then I started to see this cup and handle, and I'll show you on TradingView in a minute, from this. But I'm in the way here. Where's my head? So the next thing I do is I look. Okay, here's my risk reward. It's going to be basically 3-to-1 or 4-to-1. So when I go to put on my trade, I only want to bet about 3-to-1 or 4-to-1 in my risk to reward ratio. And I'll show you that in a minute. And then I'm going to plot my entry point, my stop loss, and my take profit. So if I go over here, let me pull up TradingView. Okay, I'm just going to show you this one. So here's XRP, and I've got so many screens here. I'm trying to move them around here. Okay, so this is a head and shoulder. This is actually an inverse head and shoulders that I saw, and I was just looking at the coins, and I was looking at this, and like, oh, this is interesting. Look at this. How you've got basically this is the head down here, and these are the shoulders: left shoulder, right shoulder. And so you come down, you got the shoulder, you got the head, the right shoulder, and then up here is the neckline. Now this is a reverse one. If it was, inverse, it'd be just like a normal human head. And typically when you've got an inverse head and shoulders like this, that's actually a bullish sentiment. In history, once you come back up to the neckline, more often than not in history, it's actually gone up quite a bit from this. So I look at this and I say, okay, if it comes up, and you can see where I've drawn the green line, that's basically the neckline. And if price comes back up to there, that's where I want to enter, because there's a good chance that if it hits that green line, the neckline, it will shoot up. It'll continue to go up. Now, there's no guarantee, right? It could go down, but in history, if you see this pattern what I'm waiting for right now is what's called the confirmation that it really is going to do that, because it could easily just bounce down. And it could bounce down off of that green line and be a resistance. But I'm hoping that it'll break through. And so I haven't put the bet on yet, but that's where I'll put it. And so I have my nice thing about TradingView, you can put the price information in there, right? You say I want to enter. So I'm entering at 59.33. That's where actually that's a little lower. I may move this, but it'll tell me that my risk reward ratio, if I put my stop loss here and I take my profit target up here, is a 3-to-1 ratio. So it makes it pretty easy. You kind of just move these lines to where you think you want to enter and exit, and it'll calculate. And it also tells me that I'm risking 5%. So right in here, I'm risking 5% to gain 15%. And so a lot of times I'll do like a 10 to 20, I'll risk 10% for a 20% gain. That's kind of what I'm looking at in there. So what do you think, Brianna? Is this kind of, if you played around with this a little bit?
I really enjoyed technical analysis. I went through that module it's been like a year now. And drawing the support and resistance lines, for me, that's like a meditation almost. I really just love doing that. When it gets to the Bollinger Bands and it gets to all those other bands, and even the moving average for me, which I would love to dive in more and understand those more thoroughly, but I just haven't taken the time because it does take so much time and concentration. And so the head and shoulders thing, whole new concept, so I'm trying to kind of understand, because you're hitting, when you said it hits that neck, it's going to hit, that would be a resistance line. Would that be the exact resistance line or above a resistance line?
It could be. So it could be a resistance line, but what I'm hoping it is that it breaks through that resistance line. And what this pattern shows is that more often than not, or statistically, it does break through that. So it is a resistance line. And so if I wouldn't be surprised if it goes up and hits that neck and goes down. And this is the thing about support and resistance lines, that if you're just using those, they're not as reliable, only because a lot of times they break through, right? They break through support and resistance. But also, that being said, a lot of times they don't. So this is where trading gets, it's all probabilities. It's not a science, and it's not even an art. It's actually a probability. It's a probability equation. And you aren't necessarily trying to calculate what the probability is. You're just knowing that it's basically a 50-50 or a 51. Your edge is what gives you that slight edge above a 50-50. And this is, I'm still learning this, but the edge is, what are you using to make your determination? So in my case, I'm using charting and I'm using this inverse head and shoulders as my indicator, as my signal, right? Other than that, what would you do? You would just look at these numbers and say, okay, I don't know. I hope it goes to here. You're just hoping and whatever. So this is what the edge is. So this gives me, knowing that it's a probability that I could easily lose probably as much as I win. Some of the best traders actually win below 50%, but that the way that they do it, when they put their trades on, they measure their risk, they make a ton of money. They don't have to win over 50%. Some of the best traders have like a 40% win rate. That makes them a ton of money if they do it right, if they size their bets right, and so on. So that's what this one is. The other one I was just looking at was the and so this is just kind of fun for me. I find this just fun, and it's kind of cool that you can make some money at this. Now my trades will be $100 probably, and I'm just learning. But eventually, I want to have a much bigger pool, and then I'll still, if it's $5,000, then I'll still only be putting a couple $100 because I only want to have that 2%. But I might have 4 or 5 different trades in. We'll see how this goes. Like I said, I just wanted to kind of throw it out here today because I'm just starting kind of on this path and to see and kind of learning and playing with it. But here's a cup and handle. So you can see it's and this is a pretty weak one, but basically it forms this cup, and then the handle kind of comes back down. So it's really interesting because what I also like about this is it starts to explain market psychology a little bit. And what this is showing is that the price had been up here and it was moving down, and then the sellers really came in, and this was Polygon, and there's a lot of sellers. They're like pushing it down, and then it finally they ran out of sellers at this price. It's sort of like, okay, I'm done. And a few buyers came in, but there was no sentiment one way or the other. You had some buyers, you had some sellers, and it kind of bounced around down here, but eventually it slowly started coming back up. So then more buyers are like, okay, I'm thinking that this is looking good. And then what happens in this formation is there's a test of it. It's like, this is the testing point. It's like, well, is Matic, like, do I really love it or not? And you'll have this fight between a few buyers and sellers, and the sellers will come in and kind of win the day. And it's also fun when you kind of think of it this way. It's like, it's a battle between the sellers and the buyers, right? And you're just constantly watching the battle, right? It's like, oh, the sellers are, beating the buyers today. And you can see, so you've had a little bit tick upwards, and then the sellers come in, and now they're testing it. So what's interesting about this is that during this test, a lot of times it is just a test. If you see this formation, a lot of times this is a bullish formation, which means that it should shoot up from around here. And so what I'm looking for, I wrote in here, I'm looking for the confirmation. So we got one green candle from yesterday. This is on the daily chart. And I'm looking to get maybe 2 or 3 more green candles. And at that point, I'm thinking, okay, that is enough of the test. The buyers are going to win out, and I'm going to get in and hopefully ride it up. Because it's going to, if it continues to go up, it's going to go up, I think, quite a bit. At least as much as this high in here. So I could draw this little line from here and just say, I think it's at least going to go to here. Right? And size my bet like that. Yeah.
I look back at like 2 years ago. I look back at like when I first started doing this. And I remember, and it's what I see from a lot of people too, when they first get into trading and investing. And I remember I just kept asking the person that got me in, I'm like, do I sell? Do I sell? Do I buy? Do I sell? Like, what do I do? I just kept asking them, like texting them, okay, do I buy this? Do I sell it now? And that just brings me flashbacks to the DeFi Accelerator, the beginning course that we were in. We were in separate cohorts, but that was just a ride. And it was so funny because at that point, I had some experience under my belt, and I was just seeing the new people come in and being like, do I sell? Do I buy? Like, it was just so funny because that's like your mindset. You don't have no idea. And then you start to get an idea and a feel for where everything has its place and start to have that more extended view of the long term and realize that everything is a part of the ecosystem. well, not everything. We can't say everything is. There are some things that are out there that are not part of an ecosystem, and they aren't really playing a key role, or they're not going to withstand some of the harder times. And so I remember just trying to figure out over this time of like, okay, how does this all work? There's many factors that come in. We have timing, like, is everything. Something that Scott Melker said, he's a trader and he has a channel. Brian Rose has interviewed him a couple times, but it was something that just really stuck with me. And he was saying, buy in the thick of it. So like or not buy, sell and buy in the thick of it. Don't try to predict the bottom. Don't try to predict the top, because it's something that you always do coming into it. Or when you start to get greedy, if you have some wins and you start to you get a little cocky, think you're doing good, and then you're going to try to be more predictable about the tops and the bottoms. But when you realize that that those resistance lines and support lines, there's a lot of people playing that game with orders being placed on those price points. That's kind of the top and the bottom. So it's just kind of risky. So like keeping it in the thick of it between those areas is a huge thing. That's one thing that stuck with me. And then we have like the news, right? And we have the hype. So there's, whether it be like a tweet of Elon's, or just even yesterday I saw, when we have somebody like Coin Bureau, who has millions of people watching one episode, and yesterday's was about Hong Kong and how this is how it's signaling a bullish move for crypto, how we could expect in the next 24 hours the beginning of a bull run, because Hong Kong is now stepping into like legalizing crypto and for retail investors, and like there was a lot to it, but how there could be some major moves. And so even thinking about like the millions of people watching that, just that one thing, there's a bunch of things that people are watching, but then having that in their head, all of those factors come into those price points. So it's really interesting. And then of course, like having that strategy, like you were saying, and you're somebody, Scott, who's you're the complete opposite of I am, because you like just you're going to go into something and fully understand it, and you're going to like be very organized with it. Scott inspires me to be organized. He's really helped with my organizational skills, but like having those little things makes such a key difference. So you're like having that strong strategy in combination, I guess, with, you can use the technical analysis and then just understanding the macro. But yeah, like you said, it's just the probability game. What I don't understand is how, like what doesn't make sense to me is, with all those factors that do come in, is how there are repetitive patterns, like with some of those charts. That's what gets me, like, but whether or not it's just history repeating itself, or I know with the support and resistance, that's a little bit more predictable and understandable, the people who are fully playing on that. But when it comes to like that other chart that you had there, that's beyond me. But
I think it's interesting. If I'll say when you get the time to dive into this a little bit, I think you'll find that it's really up your alley, because there's lots of theories. But one of the things that really interests me is there's two things. So I'll throw in a little woo-woo stuff here. Some of it has to do with the universe and about energy and about vibration. And I know that's a little woo-woo, and I don't plan to really understand it, but there are some traders out there. There's anybody that's heard the name Gann. Gann basically, back in the 20s, maybe 30s, he was creating charts based on the constellation and about star charts and about some pretty crazy stuff. And he sort of started to talk about the energy, the way that the planets line up. Like if you're into astrology, the way the planets line up, if you're into astrology, you understand that there are energetic waves based on how the planets are aligned that take effect on us here on Earth. Just the simplest one I'm looking at is like, how the moon affects, the tides. Now that's a gravity thing, but it's kind of like that. So what do you think about that? Have you ever heard that?
I haven't heard that for this in particular, but I definitely don't discount it. I think there's a lot to that as well.
So I don't know about that either. I'm kind of in the same boat. I don't know if I believe it, but people talk about that, and it kind of makes sense to me, because if you combine that with the other theory that I have, and this is the one that's more people will agree, is that a market, any market, where you've got bunches of buyers and sellers trading, it's market psychology. It's nothing but human psychology. And what's so interesting is you look at the blips, the candles on the screen or what, all that is doing is recording the psychology of humans at that time over and over, buying and selling based upon what is their psychology, what is their reasoning, what's going on in the world. And so if you take out, and you look at the big picture, and you take out all the events, because news-driven events can drive the market. But if you zoom out, they're just little blips. And if you zoom out, then you see that now we're just looking at a wave of market psychology, of just like what's happening, what are people thinking, and how are they acting and interacting, which is fascinating. And I'm just sort of scratching the surface on that. But so like when you look at this is Polygon over the long run, over I think since the beginning of it back in June 22. And this is when you start to look at, like, okay, here's the whole market as long as it's been around, and what it's done. And you start to look at, well, why did it go up, and then why did it go way down? And sometimes it's, well, Bitcoin went down, it's the timing, and everything went down. Or it could be, that people lost interest or trust in this particular type of technology. I mean, it can be a lot of things. So for me, investing, so when you were talking about buy or sell in the thick of things, was he talking more about as an investor of maybe a 3 to 6 month to a year long investment strategy? Or was he not?
Trading. He was talking about trading.
Okay. Mm-hmm. This is where it's so interesting. So this is what I'm thinking right now about trading. If I'm looking at these charts and I'm a swing trader or a day trader, I'm really only looking at the pattern, and I'm not really caring at all about what's going on in the news, because over time, news happens all the time. Now, other than a black swan event that really is going to crush everything, the theory, the way I understand it, the theory of this chart is that especially for like Bitcoin that's been around a long time, or a stock that's been around a long time, there's just so much time in history. And then when you look at market psychology, like the way humans think, and humans have been charting and looking at these charts for years and years and years, you're going to have these patterns. And so the scientists went back and looked and said, if you see this cup and handle pattern, you can start to describe that as, this means, like I said before, that the sellers they're selling, and there's more sellers than buyers, and what's the reason? Doesn't really matter. There could be a reason, but what they found is that whatever that reason is, whenever there is a bunch of sellers at once, and then it rounds off, and the buyers come back up, and then there's a little retest of that handle, that typically more times, more than 50%, it means it's going to go up. And so I look at that and I'm like, okay, there's more than a 50% chance, because of the history of that cup and handle chart, that it will go up. And so to me, that's a probability. There's no guarantee, there's whatever. And I simply, if I stay to my rules, and I never bet more than 2%, and I always stay within my risk reward ratio of about 4 or 5 to 1, then I don't care. Once I put my trade on, I just don't care anymore, because I've done what I could do. And from what I hear, and again, I'm just starting out, but I've also been reading about trading psychology, which I find super, super fascinating, because I have a degree in psychology. But that's so interesting. It's like if I start to care, and if I put a trade in and I don't have sort of my stop loss and my take profit, like at least identified, then I'm emotionally connected, and I'm invested emotionally, and that, they say, is the worst thing for a trader. That's why traders lose, because emotion takes over and you're like, should I get out? Should I not get out? Oh, well, what about this? And what about this news? And what about this? And then you're starting to second guess everything. So what I'm going to do, and this is, hopefully for you guys out there listening, this is interesting because I'm at the very, very beginning of my trading learning and so that's my goal. We'll see what happens, because I don't know if I'm going to freak out in the middle of this, Now with $100, I probably won't freak out. But, when it starts getting higher, my goal is to not let my emotions affect this. And that I'm not saying that every single time I put a trade on, I'm going to have my stop loss and probably always have my stop loss. I think that's a good thing to always do. But I may not have my take profit dialed in. I may wait to see how the market kind of moves. But in general, I should have an idea of where I think I should get out. And that's probably what he was sort of saying. It's like I'm looking at a chart and I've already identified where I think the market will go, right? Based on charting history. I'm not just guessing, I'm basing it on charting history. And I say, I think it could at least go to here. Now, one thing I've noticed is that some traders will identify that, and then they'll see it go down, and then it'll, like, they're in a loss position. They haven't stopped out, but they're in a loss position, and then it goes back up. And now they've made a little bit, not as much as they planned to, but they've made, let's say, 25%. And they'll sell because they're like, oh, I just got to get out of this thing. It's like, I'm back to a profit. I don't know. I see a lot of traders do that. And I don't know if that's good or bad. They still had a profit. So we'll see. But, that's the journey. And it's fascinating. I think we should talk about it more and just,
Yeah.
Ask questions and stuff as I kind of learn, and you ask me questions, and I see if what I've learned from this, because I just think it's fascinating, and hopefully new people that haven't done it, or if you're doing it, we'd also love to hear from you. What you think, what's your favorite coin that you might be trading, and some of your strategies and theories, because it's fascinating. You could do a whole separate show on just this.
Yeah, totally. I might get in there too. I might start trading one.
Yeah, I wish you would. Just a little bit.
Yeah.
Pick one. You just pick one, and $50. The thing, $20. The thing I like about having some money in there, even if it's $20, is it just changes your psychology.
Right.
Because people talk about paper trading and all this stuff, and I've done it a little bit, but I haven't done it a lot. Some people will paper trade for a long time. I'm just like, you need to have some skin in the game, because it changes your psychology.
Yeah, it does. And then I just want to clarify too, because when I was talking about Scott Melker, I don't think I stated it totally clearly, because when I said buy in the thick of it, so let's imagine that we have the support line on the bottom, and then we have the resistance line, and then we have a bunch going on in the middle. It's thick in there. So the top of the thick of it and the bottom of the thick of it before it extends down, not in the center. That makes no sense. So I didn't really clarify that, but that's what he was saying. And for some reason, that was a really helpful thing for me to hear. But yeah, I'm going to get into, yeah, go ahead.
Oh, I just was agreeing with you. It is that, it kind of is the same thing as, right, when everyone else is buying, you should probably be selling. It's kind of like that, because what that means is because the overall investors overall have it backwards. More people that invest in crypto, anything, lose money. Retail, I'm talking about just average retail investors, because they're doing it all emotionally, and that's what I'm trying to do everything. I'm trying to not do that at all, right? And if anything, I guess I'm a little kind of organized, but I'm organized when I'm fearful. Like when I'm like, I don't know what I'm doing, and I don't want to, this is my money, and then I kind of get organized and I go really slow. And so there is that. But I also, it's like, I don't want to start. I just want to jump in there. Obviously I want to, but I don't. And I'm like, okay, I'm going to figure this out the best I can, knowing that I'm not going to figure it all out, but I'm going to, how best that I can till I can get in there and understand some of this stuff. But most people basically, when the market's going up, I better buy, because they're FOMO. It's like, I don't want to get left out, right? And when everybody's really sad and whoa, and that's why people are looking, when everybody's like, oh, the market is terrible, the really smart people know that now it's about to turn around. I better get in now when it's low. So it's kind of like that. But if you, I guess the reason that I think is interesting to focus here, I think, is by using that strategy. I think do you agree that what I just said was kind of what he was saying?
Yeah, the taking the emotion out.
Well, no,
Is
about
that,
basically when everybody's trying to buy it because it's
oh
FOMO,
yeah,
that's when you should sell or just not buy
yes,
more. It's kind of what
yes.
he was saying. Yeah. Don't wait until the very top or the very bottom, right?
Mhm.
Don't try to time that. And so the difference that I'm seeing is when you're day trading or not even swing trading, I'm not even looking or caring about what I like in this. So let's say what he was talking about or what I'm talking about is within a year to 2 year time frame, right? Like just take Bitcoin. There's a bull market, it's gonna go up like it did, a year ago to 69,000, and then we've been in this huge bear market, right? So that's the classic, right? I'm not talking about that because I don't I have no idea how to pick the exact top of a bull market and then the exact bottom of a bear market, right? So what I'm trying to do, what I like about this trading is that I just shorten it down and say all I care about is what does this chart pattern look like? If I use a technique like cup and handle, let's say, I know in the past if it does this thing, there's a chance because it's done it in the past that it will go up. Now, I'm not saying that now it's going to go all the way to the top and it'll be the top of the bull market. I'm just saying it's going to go here and I want to make 20%. I'm going to risk 10% and I want to make 20%. And it's sort of this really narrow trade scenario. It may go up to top of the bull market, but I don't care. Now, to tell you the truth, this is what I'm like, what happens? So what happens if Polygon, which I'm going to be putting a trade in here probably, what if the bull market hits here while I'm in this trade and everything is going up and I hit my 20% and I'm like, but everything's going up. I'll probably sell some, but keep some in the game. That to me sounds kind of reasonable because it could be going up, but I'm going to take some profit. I'm not going to. They also say that a lot of traders don't take profit, right? I know you and I have talked about that. Like and I think you were caught in some of that, right? That you're like, where should I go? And then it just drops and you either lost all the profit or you didn't take as much as you could. And so I want to be aware of that. But yeah, I'm just looking at this really sort of short term, not trying to time the bull market and the bear market for sure, but just like, can I make 20%? And that's sort of my focus now. So we'll see how that works.
Well, yeah, you'll have to share. You'll have to share how it all works out for you. And you're spot on again too about the emotion, taking the emotion out. And I remember that being such a harsh. I remember like being on the other side of that learning lesson.
Yeah.
It was in a module that in one of the things that we took, but it's so true. Removing that emotion is so key. Really taking the time to prepare and strategize removes so much down the line. And the market doesn't care about you, right? And that's one
It
thing that
doesn't.
we just have to remember and not take personally. But for me, there's a little bit of emotion. There's going to be things that come in when it comes to the projects I'm investing in. Now,
Yeah.
does that mean I should invest in everything that I like or that sounds great or that just like makes me feel like warm and fuzzy? Like, no. But there's definitely things that I will not invest in. And there's a little bit of an emotional attachment to that. And, I always get caught up in the founders. Like if I trust somebody, like if someone just speaks my language and I can tell and they seem honest and trustworthy, I'm like, yes, like they're doing great things for the world. I want to like back that project. But even with that, I have to check myself because it doesn't mean it's going to be successful. And this is money we're talking about.
Okay, so I think that's a really important point to emphasize to people because that that feels good. It feels good to say, oh, what are these crypto projects or any project, it's a good company and I believe in, I believe these people. And then emotion, you're like, that means that you have emotion in it, right? And so it's a good thing. And I was just thinking, well, if you look at it like, okay, I want to contribute to the success of that company, then maybe the emotion is, I don't know. I was just thinking if it was sort of like if it goes up or down, you don't really care because you're just trying to help it, help the company. There's that. But if you put it in there because you want to make money, then I think that is a little bit dangerous. And I totally get it, because this is why when I kind of started to understand that, I'm like, oh, I don't like this. To me, it was just too mushy. And it's like, and I'm not saying I know what I'm going to do with this because I'm just starting out, but it's like, that's why I wanted to go to charting, because I wanted to take all that sort of emotion out. And so this is what I'm finding. So let's say I've got XRP, Ethereum, and Polygon right now on my radar. Now, Polygon is one of those, I really like Polygon. I like the founders. I hear so many good things that they're doing. I think that they're a company that's moving the whole crypto ecosystem and market forward. They're doing really good things. So I am sort of a little bit invested in that. Now, Ethereum to me is just kind of straight. I like it, but I could trade that, especially since I'm looking at really, we're talking maybe a couple of weeks, maybe a month max in what I'm looking to trade in here, unless they drag out a little bit and they go higher. But XRP, I don't really care about. I mean, that one that's been around a long time, but I just don't know what to think about that one. So I'm looking at that strictly as a chart to trade. So yeah, I think that is interesting. And so that's something we should talk about moving forward, because what is a good strategy then if you are emotionally connected to a project? And there's nothing wrong with that. I mean, that's human nature. It's good. We should do that. But how do you trade? How do you invest in that? And the way my first thought, Brianna, is that if that's the case, if you're emotionally attached to it, then maybe it should be a long-term investment. Don't worry about it going up and down in the short term. Just buy it, contribute to it, and just root for it, to go up. And if it doesn't, whatever. But it's like Bitcoin. We're rooting for it to go up in the long term. And in fact, that's what I probably want to do with Polygon. Like, I've got Arbitrum. I've got, once I got the airdrop coins, I've held on to quite a bit of that, because I think Arbitrum and Polygon are the two big layer 2s. And so my plan is probably to buy that long term. And I may just do that with Polygon. The only reason I picked it out is because it was the first one I saw had this cup and handle. I'm like, oh, look, it's a cup and handle. Like, I nerded out on it. So we'll see. But, I think that's a good discussion point. Yeah.
Well, and hey, how we have these portfolio strategies dependent on the bull run, whether it's in a bull run, bear market, or whether the market's moving sideways. So maybe we just need to add like a little tiny section that remains, that's for an emotional trader, for those those projects you want to contribute to. And so you can put it all in there, like just a little bit, but you can put all your emotion into that one project and leave it out of the rest. Leave it out of the rest of your pie chart, out of your trading portfolio.
Because I think that's fun. I think that's fun. That's the thing about, I think that's the thing that I've always liked about markets and trading, is that, you get wrapped up in a company, like Apple. I'm a big Apple fan, so I like Apple. So I probably should own Apple just because I like Apple. And that's fun, And yeah, you can put a little bit of money on it. But if I'm going to sit there and worry about, I'm losing money, then that's probably not worth it. But to me, it's really fun to attach to a token or to a company, because it's in our lives, especially like Apple. It's in my everyday life. And I love their products, and so I want to be a part of it. I want, in that case, I'm a company owner. In this case, you're a protocol owner, which is kind of cool too. Different concept.
I feel the exact same way about the Nike airdrops with those NFTs. I know I keep bringing up the Air Force Ones. Like, I love Nike. I think that Nike's slogan is one of the best slogans. Just do it. I think it's one of the best slogans, if not the best ever made. And I just have this attachment to that, and I really want a pair of those NFT Air Force Ones, because they're gonna start being able to play them in the sports games, like with you think about that whole thing coming forward when it comes to gaming. And I'm not a gamer, but I still really want these, and you think about how you're going to have your player in these games with your NFT Air Force One sneakers and your whole valuable player. And then say I trade that player to somebody else, let's say Michael Jordan gets his hands on a player, and then that one could sell and bring so much more value just to that player and all of their little, their whole get up. I don't know. I know I'm going off on a tangent, but
NFTs
I totally agree.
are cool. You
Yeah.
know, NFTs, so this is interesting because to me, what I love about NFTs right now in my journey in crypto is the ownership of it, not the trading value of it. It's because I think it's cool and I want that and I want to use it. I want to interact with it. And we can do that because we have the value of the ownership on the blockchain and we can, it's our NFT. And when they connect it to games and to sports, it's just a lot of fun. Now, there are people that trade NFTs just for the trading. I don't want to do that now, but I'm going to never say never because I just said I wasn't going to trade cryptos and now I'm trading. So I may trade NFTs, but right now NFTs are all emotional for me. It's all about emotion. You know, so that's what I love about the crypto ecosystem. You know, it's everything. You can be a pure trader. You can be an emotional investor and just invest long term. You can geek out on NFTs where they're interactive in games and however music and whatever. That I love it. Yeah. Well, we kind of just went the whole hour talking to that stuff. Is there anything that you want to bring up? We got a few minutes.
I
Anything you can
mean,
squeeze in here?
I can squeeze something in.
All right,
Yeah,
squeeze it
let's
in.
talk
Squeeze your
about
El Salvador. Why
let's talk
not?
about El Salvador.
Your favorite
Uh,
thing.
it is. I just can't get enough. So this is on the right, the guy in the hat is Nayib. I'm probably not saying it right. Nayib Bukele. He's the president of El Salvador. And then over here on the left, I don't know if this is fitting in the screen very well, but over here on the left is the author of the book, The Bitcoin Standard. So, Scott, have you read the book, The Bitcoin Standard?
I have it in my no, I have it in my list, but I haven't read that one.
I haven't read it either. I've heard of it. But his name is, I don't even want to try his name, but the author of the Bitcoin Standard, he's become the newest economic advisor to El Salvador's National Bitcoin Office, which is pretty cool. I love the way that everything's coming together for El Salvador. So um, they welcomed him to the winning team. And basically, one thing that was said, okay, we know that because El Salvador has Bitcoin as its currency. And sorry, I want to get to this point here. Oh, okay. So the Bitcoin Standard author, he told the local newspaper he's confident about the possibility that El Salvador will be free from debt in 5 to 10 years. That's really huge.
That
And
is
he
huge.
also says that the country has a large potential to be a hub of innovation, which it already is becoming. They have zero tax for technological companies, and that's made that country very attractive. State of Texas, I think, either passed, I know they proposed uh, a zero tax for technological companies and for people who are transacting using cryptocurrency. That was a while ago, and it could have been overturned. But that's just something that's kind of going on. So El Salvador and Texas have a close relationship. The president does with somebody in Texas who's in the government. So they actually have an embassy that's going to be built in Texas as well.
Cool.
And so he didn't name other nations because a lot of what they're saying is that these initiatives, like the zero tax for technological companies, have made it attractive because of other nations doing the opposite. So he didn't say exactly which nations, but they said it could be hinted at the United States, United Kingdom, Portugal, and Italy. The author, I need to just get his name down, but he requested to not be paid for his new role. He's solely going to be an advisor to the president. And they're also helping. They have a program there for Salvadorans interested in learning code behind Bitcoin and Lightning Network. So this is all just they're totally changing the way of this country, because not long ago this country was overrun by gangs, like dangerous, a lot of murder. The murder rates have gone down, and things appear to be transforming. And then I added because when I read the part about the debt free in 5 to 10 years, oh no, it didn't load. Okay. Shoot. Well, I added a chart here. I'll see if I can get it. That was the United States debt.
Mm.
I don't
Yeah.
know. It might not load. I just was gonna ask if you thought we'd
Trillion.
be getting out of this in 5 to 10 years, but
Oh my gosh.
it's not
I mean,
loading.
we'll never get out of our debt. So, I mean, we'll never. But it's awesome that they are, and all this continuing good El Salvador news is good because we didn't know it was going to work because there was mixed messages, when they first started this, and so this is good. Yeah, keep us up to date on all this El Salvador because it really is sort of the world. We need more worldly examples that are really working. And we've got little ones. We've had a lot of little stuff. How Bitcoin helped these farmers and different things around the world. But this is a big deal if a country can become a big player in this, especially like a smaller third world company becoming a powerhouse like that. And yeah, it'll be interesting. And it'll also be interesting. The bigger they get, the more powerful. Like who's going to want to take them out?
Exactly. Oh my gosh, you're right in my mind. And I think so much about this because I really would love to have like a little, it's going to be, if everything just went as planned there, it'd be a little oasis and a little dreamland that so many
Yeah.
people would flock to. I think it would be great to have a little piece of real estate there. But I also, you're going to notice same thing. Like if you want to learn more about El Salvador and Bitcoin, if you just type it in the Google search, you are going to see it flooded with mainstream news hating on the fact that they're doing this. Like it's just, you see the narrative behind it, and it's just so clear to see. Once you see that, it's so easy to tell what side, like what that narrative is and where it's coming from when it's just and really trying to push how dangerous it is in El Salvador and how risky it is that they're doing this Bitcoin thing. So I really like that the president, and you can only do your best and who you're gonna like trust or what you're gonna take as the truth. But the president, I like how outspoken he is, and they put out statistics regularly of what's going on with the murder rates there, what's going on with his approval ratings, and all of those things, and obviously making close connections with people who are also pro crypto in the United States, and I'm sure other places in the world, and just kind of setting that example and paving the way. I think it's just so cool. I can't wait to see where it goes. I can't wait to see it in a couple of years. And it's just, it's exciting to even think that Bitcoin has transformed this country from what it was and to where it could potentially go and where it is now. So I'll end on that note.
Yeah, great, fantastic. Yeah, good note. Yeah, that's fun. Yeah, so keep us updated on that. All right, well, we've got some other news, but I'll save mine till next week. I think most of them aren't like high, topical that they need to be talked about this week. So we'll bring them up next week. And if anybody has any ideas you guys want us to talk about, put them in the comments window or let us know, and we'd be happy to talk about it. And let me know if you enjoyed it all, that little bit about trading, and we'll do a little bit more of that off and on. We're gonna get Brianna into something, and we're gonna. In fact, I think that'll be fun. We can trade our ideas. Like, okay, here, I can say, here's my cup and handle move, and you're like, well, here's my support and resistance move, and we'll see what happens.
Let's do it. I'm all about it. Let's do it.
All right, everybody. We'll see you next week. Bye.
Bye, everybody.